Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin, Mota.
Well, Yatin, the Diwali week has certainly started on a sparkling note, right? After 5 days of correction, deep correction, we've seen the Nifty stage a turnaround, and a good one at that, because it was a triple-digit up move. In fact, at one point in time, we were even above that 24,400 mark, but no reasons to complain, because we have shut shop above that 24,300 mark. A good 160 point kind of an up move coming in on the Nifty, and in the Sensex as well, Yatin. 600 point up move, we have reclaimed that 80,000 mark.
Yeah.
Strong bargain hunting across the broader end of the markets as well. You had the Nifty mid-cap index gaining almost 1%. And of course, all thanks to the Nifty bank index, right? Financials were the big theme today, thanks to numbers from ICICI Bank. And even in terms of earnings, it was a pretty good day, Yatin. If you look at the likes of ICICI Bank, Shriram Finance, some of the mid-cap banks, good set of numbers. Even Sun Pharma reported numbers just a few minutes ago, half an hour ago or so, and a good set of numbers coming in. It was an earnings beat. There were quite a few disappointments as well, but we'll talk about that as we head into this show. But aside of that, if you look at the advance decline ratio firmly in favor of gainers, 5:2, that was the kind of advance decline ratio on NSE. Buying across financials, metals, realty, in all of these pockets saw good traction. PSU Bank Index was the top mover, Yatin. 4% in excess kind of gains coming in on the PSU Bank Index. And if you look at the individual movers, Shriram Finance after a healthy set of numbers, ICICI Bank, of course, best in class numbers, within the private banking names. Wipro, Eicher Motors, Adani Enterprises, and a lot of other names were gaining. Even the FMCG names were gaining in trade today. HUL, Asian Paints, Nestle, all these consumption names are doing well. But what didn't do well was Coal India on the back of earnings disappointment. It disappointed on all parameters. Yeah. Top Nifty loser, 4% cut coming in there. Bajaj Auto continues to be iffy. Experts say that GST figures post-festive season, Diwali, that'll be one key monitorable to understand whether there has been a slowdown in urban consumption as well or not. Kotak Axis Bank under pressure, Hero Moto, Bharat Electronics, these are some of the names that were under pressure. But I think quite a few results reaction when it comes to the broad end of the markets.
Yes, the market was quite strong today. In fact, today we also had the listing of Vari Energies, Nandita, and that stock listed at a 55% premium to the issue price of 1,503. Settled shop at close to 2,338. So a good 835 rupees premium on the shares of Vari. Apart from that, in the mid-caps, we had stocks like FSL gaining by nearly 12% after the management revised the guidance upward by nearly 6 percentage points. Obviously, this also factors in the inorganic growth plans and the acquisitions which will contribute to the growth. Indian Bank, Bandhan Bank were the other gainers in trade, gaining by nearly 10% each. What did not do well is IndiGo, and that airline stock fell nearly 8% after posting a big loss for Q2. Chola Finance, good numbers, however, the pain in NBFC space and unsecured, lenders and the kind of personal finance, outlook which is there by a few NBFCs has, clearly spoiled the entire sector sentiment. In fact, Chola Finance was down 7% despite good numbers. We also have shares like Craftsman, Grindwell Norton, MGL, all of these stocks, anywhere down between 5 to 7%. Also, if you talk about FSL that I mentioned earlier, that stock was at a new 52-week high post good numbers and revision in guidance.
That's true. Quite a few, winners when it comes to earnings. We can heave a sigh of relief because thus far earnings have been a big disappointment, and markets, as we say, are a slave to earnings. Yeah. And that has really played out. But this week seems to be a little different. At least, touch wood, it's just Monday. But let's hope that by the time we hit the Diwali Muhurat trading session, the sentiment remains upbeat, and the relief rally that we are seeing continues to power ahead. But on that note, let's take a look at the stocks that are on our radar. Yatin was mentioning Bandhan Bank. Good numbers, although there has been some stress in the MFI book. That has been the case across lenders as well. We've seen with the likes of Kotak Bank and even RBL Bank for that matter. MFI weakness in MFI book has played spoil sport. But here the focus has been on other parameters. There has been stress in the MFI book, yes, but brokerages believe that it is better placed versus its peers to manage that weakness in MFI book. Earnings per se has beaten expectations. You saw profit jump 30%. NII, net interest income, has jumped 20% on a YY basis. NPAs edged higher on a quarter-on-quarter basis. Their asset quality has deteriorated on the back of higher slippages, but deposit base showed robust growth, and its emerging entrepreneurs business book also was better than the peers. That was also one positive point that aided in the rally that the shares of Bandhan Bank saw today. There has been broad-based momentum, in its lending segments, including the home finance business as well. And as I was mentioning, stress has been there in MFI book, but some brokerages, although are cautious, but they have taken note of other parameters where the bank has done well. The valuation picture, Nomura has hinted that valuations are benign after the kind of correction that the stock has seen. And because of the challenging MFI outlook, they are a little cautious, but they have upgraded the stock to a neutral target price at 180 rupees per share, and they have said that there has been a steady show in the second quarter despite challenging environment, and healthy loan and deposit growth is something that has compelled them to upgrade the stock. Macquarie also has an outperform call. Target price is higher, 250 rupees per share. Higher operating expenses have played spoilsport for the second quarter profit, but lower credit costs came as a cushion. The key focus going forward will remain on the potential stress in the loan pool, but management is targeting 1.8 to 2% kind of credit cost for FY25. And growth, of course, for the bank will be driven by the secured segment, although margin pressure is likely to continue. And valuations, Yatin, most brokerages are pointing out that valuations are looking good, and given the fact that the bank is well poised to manage the stress in MFI book compared to other lenders, this makes a good candidate to look at for a buy call. Jefferies has also given a buy call, target price at 240 rupees. Even CLSA has an outperform rating. So all in all, the outlook on the bank has been positive from brokerages after the second quarter numbers, and with the consistent underperformance that the stock has seen, valuations have become very attractive, and looks like here on things will look better or look up for the bank, because the key pain point, the MFI stress, is manageable according to most brokerages.
Most importantly, I think the IndusInd Bank MFI numbers spooked the street. The stock was down 20%. That also had an impact on Bandhan's share price. But I think post numbers, the street probably did not factor in, that kind of a advantage that Bandhan has on valuation as well as the control on asset quality. Yes, the credit cost will increase, but clearly, as Nandita was mentioning, most of the target price are in excess of 240 rupees. So valuation comfort is there on the share price of Bandhan Bank. But what did not do well today was IndiGo, and last quarter we saw a good number coming in. Market share was higher by a couple of basis points, but this quarter I think the loss number surprised. It was a lean quarter, and usually in monsoon we typically see that the airfares are slightly subdued. The fuel costs were also higher because this time the crude was quite volatile for the entire quarter because of the geopolitical reasons. Now, Kotak Institutional, however, they have a buy rating on the stock. They say that the sharp Q2 miss in profit before tax was led by groundings, related compensation, and unexpected fuel inflation. And we have clearly seen that the ETF prices also have remained volatile for the second quarter, which has led to margin pressure for a company like IndiGo, which has a large part of its cost linked to crude oil prices and ATF, which is aviation turbine fuel. Now the overhang was heightened by seasonality and sharp uptick in demand versus supply to the previous year. Last year, we saw a lot of issues with Air India, with SpiceJet, and other airline which were competing. But now I think with adequate supply coming in, the market has saturated according to Kotak. In fact, if you look at Q3, the base is higher, but the seasonality factor is there because we have the festive season in Q3, so the performance will be monitored. However, Kotak also cut the FY27 earnings estimate by nearly 10 percentage points. So that is the reason why the stock was slightly nervous today, but the results are clearly disappointed when it comes to IndiGo's second quarter performance.
That's true. I think first quarterly loss in 7 quarters for IndiGo, and obviously you were also mentioning the seasonality factor, but the festive season and the year-end travel, because December New Year travel could lift fortunes, but of course big earnings estimate cut by Kotak, that had dampened sentiment today. But another stock that was in focus and was a high flyer was Firstsource, Yatin. Strong revision in revenue guidance, right? And that really led the stock to fly high in trade. RP Goenka group company. 11% gains coming in post the guidance revision. Of course, the constant currency revenue guidance has been revised to 19.5 to 20.5% vis-a-vis 11.5 to 13.5%. That's almost being doubled, right? And but just want to mention that the revision in guidance includes a 5% contribution that will come in from Firstsource that the company's UK arm had acquired just a month ago. I think in September sometime for 42 million pounds. And excluding this acquisition as well, Firstsource expects the organic revenue guidance to be around 14.5 to 15.5%, which is still higher than the guidance it had given earlier, which was of 11.5 to 13.5%. So this boding well for the company, but margin front it was a disappointment because they have calibrated the FY25 margin guidance to 11.5% from 12%. And if you look at the quarter-on-quarter margin performance, it has contracted slightly, 11.8%, I think vis-a-vis 12% if I'm not mistaken. So yes, margins remain under pressure, and management was on CNBC TV 18 today, and they've also said that a lot needs to be done when it comes to margins. But aside of that, if you see the company has given a very good picture when it comes to deal wins. It has a robust, deal pipeline. In the second quarter, it had closed 3 large deals, and in the third quarter as well, it is hopeful of more than 3 or actually more than 3 deals in the third quarter. Look at the stock performance in tandem with other mid-cap stocks. Firstsource has also done well. In the last 3 months, it has rallied somewhere around 45% or thereabouts, and we already saw what happened with the likes of Persistent, Coforge. All these stocks had hit fresh highs after numbers. Of course, we will see what brokerages have to say about Firstsource tomorrow morning. But within the mid-cap IT pack, some of these companies are poised for further earnings growth. That's what brokerages believed when other companies reported good set of numbers, and they said that although valuations are at a premium, these companies are justifying these premium valuations because of the kind of earnings potential these companies have. But let's see what really brokerages have to say about Firstsource when we get the first reports tomorrow morning. Yeah.
Absolutely, and I think Sanjeev Goenka, the chairman of the company, spoke to CNBC TV 18 in which he spoke about the deal pipeline being healthy and the revision in the guidance.
Yeah. Well, all in all, a good start to the week. Let's hope that the festive spark, remains on the Lal Street, and we see a good Muhurat trading session as well on Friday. But of course, for now, I think we are signing out of the studios. Good evening. Have a great one, because we saw some bit of a relief rally play out on the Lal Street today. Come back and join us tomorrow morning, all refreshed for another day of trade. On opening bell, we'll get you lots more about stocks and market outlook, etc. So we'll see you then. But for now, it's a goodbye from me and Yatin. Thanks a lot for watching.